Hey guys, how are we doing on this fine morning today? Yesterday's morning video drew a lot of very interesting takes on the topic we discussed. We have finally narrowed down that housing has a direct impact with birth rates. However, towards the beginning of the video, I showed a graph that showed a very steep decline on birth rates starting in the year 1971. I told you guys to keep that date on your mind, because this date is incredibly important to unraveling all the puzzle pieces. Today's video is going to show you the origins of the sickness that has spread all over the markets and economies worldwide. 1971 was the year that the government renounced responsibility over all aspects of American life. From inflation to wages, from energy sectors to food, I have found evidence across all economic sectors that point to the real answers. Due to the absolute magnitude of overwhelming evidence, this video will be a little different. The first portion of the segment will be me showing you undeniable evidence that 1971 was the year in which something broke in the system. We are going to Tokyo drift through that, and then I am going to explain what it is that all this evidence stands to serve. After explaining to you in great detail what it is that changed in 1971, I will then smooth it out for you guys, and explain how a variety of changing factors were manufactured to grow an economy that is based on human temptation rather than something tangible. I know this all sounds very confusing right now, but it's because the complex nature of the subjects we are about to discuss make it hard to sum up in an intro. Please be patient with me. If you give me a shot to explain all of this and stick it out to the end, I think you will have a strong sense of understanding of why our economy is absolute junk. I only ask for patience to the end of the video, that's all. I want to thank River Financial and credit them for the amazing work they did, which I borrowed from and inspired me to make this video. Colin and Fenton's work is absolutely amazing, and I will quote them as I go through this. I don't want to waste any time, so before we get started with today's segment, let me quickly disclose and state that I am not a financial analyst or advisor, and that all contents discussed in this video are provided as opinions. All efforts are placed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Everything presented is evidence I collect, and all opinions are based on research, experience and knowledge on the matter. Shout out to all my Patreons and one-time donors, who continue to support this channel. Buckle up, because we have a lot to discuss. What happened in 1971, you might ask? Well, let's see. Growth, productivity and hourly compensation diverged. As you can see in the graph, compensation started stagnating around these years, which funny enough also happens to be when a war on unions started taking place. I am sure that however you feel about this issue, it did help contribute to this from a statistical standpoint. Income growth between the top 1% of earners and the bottom 90% of earners completely switched. We see that most of the income growth rested with the great vast majority of Americans. As you can see, things have changed a lot. Take into account that this chart only accounts from year 1920 to 2010. In 2020, the top 1% of earners have skyrocketed even higher. Compensation of employees have had a relentless decline over the past 50 years, according to the United States Bureau of Economic Analysis. Income concentration at the top has risen sharply since 1971, while the income share of the top 1% relative to the bottom 90% has grown out of proportion. Unit price per can of Campbell's condensed tomato soup started surging exponentially due to inflation taking a hold. Cumulative inflation shows that points to 1971 as the year where the numbers started surging steeply, going from 306% to 2,326% by 2015. Consumer Price Index in the United States shows a steep growth starting in 1971. Electricity, Food and Fruit Consumer Price Index started growing exponentially all at the same time. Average sales price of houses sold for non-farm workers started making new highs. Diving a bit deeper, we see currency crashes literally become normal in 1971. The number of countries with banking crises started to once again get out of control in 1971. American national debt started to grow out of the normal range in 1971. The United States personal savings rate started declining in 1971 as well. American merchandise trade balance comparative to the percent of the GDP started declining into the negative numbers. Funny enough, divorce prevalence by all ages just so happened to steeply rise in 1971. Trends in obesity among children and adolescents aged from 2-year-olds to 19-year-olds started to increase slightly in 1971 before they started surging. The share of young adults living with parents have risen to levels not seen since the Great Depression era. Most importantly for Wall Street, the number of lawyers and population per lawyer saw a dramatic rise in 1971. Nothing is ever a coincidence when we talk about economies, and this last graph is the perfect example of this. As you can see, all aspects of the economy just happened to start getting out of control in 1971. So what exactly happened that year that led to such economic turmoil and instability? Well, the answer lies in a variety of factors. Let's begin with gold. As Andrew Fenton cleverly explained, the gold standard negotiated the rules of the international monetary systems with fixed exchange rates between currencies. You see, this allowed a certain level of consistency across the time when gold was the standard. Foreign governments traded dollars for gold. Even in theory, you could trade $35 for an ounce of gold. However, our government started running into great trouble backing the dollar currency with gold during the late 1960s, mostly due to the excessive amount of money printing to pay for the Vietnam War as well as other welfare programs. This is why President Nixon decided to kill the system on August 15, 1971. Everything before 1971 followed a very stable and consistent balance, and economic problems in the world were not as big. However, once the government decided to shift away from gold, and started printing money as much as they desired, things started to change, as I just illustrated to you guys. As Colin explained, the temptation to print money is the greatest temptation in the whole world. As we print more and more, what we are really doing is we are taking slices of the economy and making them smaller every single time. As such, each slice now becomes less valuable, and nothing new is created either. You have the same type of slice you did before, but now it is much smaller. The rate by which your slice gets smaller keeps growing every year. This results in growing inequality across the globe, not just the United States. So what happens when people are confronted by this phenomenon? Simply put, people decide to place their money on assets, because holding on to it means you will lose value. The more assets you have, the better you will be in the long run, because those assets will increase in value due to inflation, while just holding on to cash will end up in you losing money. However, over a stretched amount of time, this has a very negative outcome for society in general. You see, this starts to create massive inequality at all types of economic levels, because the wealthier someone is, the more you can afford to buy and hold in assets. This system only favors the wealthy, because they get to hoard all assets in an economy, which is what is happening right now. Due to inflation being stagnant for so long, the few and top 1% managed to get advantage and leverage over everyone else, and the result of this started showing in 1971. 52% of young adults are now forced to stay at home with their parents, instead of building families and moving out. As such, growing resentment is growing, with many blaming capitalism as the system that has robbed generations and will continue to rob future ones of prosperity, financial success and opportunities to grow. I do not think capitalism is the sole problem, as it was working just fine until 1971. Something else changed. We let corporations bribe their way too far deep into politics, and now they are playing games that let them maintain dominance. Let me smooth this out for you guys. There is a calculation that can be performed in which when capital can be accumulated in banking saving accounts, interest rates start coming down. This creates a hunger in companies to want to borrow money and use it to do more investments and go on ventures. In other words, creating new money and artificially suppressing the central bank interest rate distorts economic calculation, which is a tactic that companies as well as financial institutions are relying a lot these days. This is why highly profitable companies like Apple still prefer to borrow billions of dollars every year to buy back their own stock. As Colin puts it, why would they borrow money which they then have to use to pay interest in order to buy back their own stock? The answer is the replacement cost of assets is higher than the replacement cost of capital. This ease of restrictions for corporations is incredibly dangerous and antithetical to the very concept of capitalism. Stock buybacks are a cheap way for companies to disguise their own limitations and problems and allows them to enrich themselves at the expense of shareholders. Stock buybacks allow them to influence a stock's price via repurchases, which they can and habitually use to boost the stock's price to secure a gain on contracts like options. Even more important, and this is where this issue really defeats the whole purpose of capitalism, stock buybacks starve a business of money needed in other areas, such as research and development or investment into new products, facilities and their own employees. When you have the ability to inflate your own price by playing with artificial methods, you are not really improving your company, which is the foundational theory of capitalism. Capitalism works when people and corporations work to improve themselves over time in order to grow value. If you have a system where you can artificially play with the result without having to do any of the necessary investments, you no longer have a working capitalist system at all. This is the epitome of the current economic problems which we are facing in the globe. GameStop and AMC and the rest of the meme stocks are symptoms of this much grievous problem. What happened in 1971 was that we started to see the ramifications of an economy that rewards the elite top 1% and punishes those that can't keep up. By keeping wages stagnant while keeping inflation growing, the 1% managed to get a crazy advantage that has crippled an entire nation. Through inflation, people are able to afford less over time, and with wage growth stagnant, there is little to nothing they can do. Another factor was that America got used to wanting to print money to deal with all of its problems. Rather than face each problem on their own, which would imply having to address the real issues in the economy that come from the top 1%, they will rather keep on printing money as a way to treat symptoms temporarily. By printing more money, you simultaneously make it be valued for less. It's the scarcity principle. The more there is of something, the less valuable it becomes. It's why when gold was the standard, things ran smoothly for the most part aside from big global issues that would arise every once in a while. Now, whenever they print more money, your cash is worth less. Being the ability to invest in assets being impossible for people since prices are too high, only the rich can benefit from this system. They keep raising valuations for assets and commodities so that the population in general is not able to attain wealth. In 1971, we saw the system break. As the figures demonstrated, everything started diverging from the normal growth things experiences. This is because it was the first strike for the rich to really monopolize power to themselves. This is the birthstone to all the problems that we have, from the housing crisis, which is really a symptom of this, to things like Wall Street engaging in literally outright criminal acts to prohibit retail traders from winning on their bets. They will continue to do everything in their power to retain their spot on the top of the food chain. Only by sticking together and putting aside our differences can we really have a chance to combat this. They will continue to throw easy distractions through the media to divide you, to make you think your neighbor is the source of all your struggles, because they cannot afford people rallying together. The only way to win this game in my opinion is with a meme stock and by sticking it out for however long it takes. But even I am a flexible person, so do let me know what you think and if you disagree in the comments below. Finally, we concluded many of the systemic issues down to their real origins. Now we know where we stand. Thank you for watching this video. I hope I was able to inspire some wrinkles here and there. I have some really cool topics I want to go over with you guys in future morning videos, so stay tuned for that. Thank you all for watching these morning videos. I did not think so many would actually find these that fun, but I have been proven wrong. You guys seem to be really benefiting off of these and I am loving it. If you want to help this channel, I have provided links which will be in the description for donations and a Patreon if you would like to pledge a monthly donation of any kind. This support really goes a long way for me guys. All money is spent on improving equipment and other parts of the channel so that we can continue to upgrade the quality of Simulate and Trade. It is my source of income as I am doing this full time now. It makes a huge impact and difference, so if you are able and willing, do consider it. I shall see you guys later today on the afternoon recap video, so stay tuned for that. Until then, buy the dip, enjoy the rip and to the moon.